Good afternoon. Welcome to the countdown. It's been a reasonably okay day for the markets. A push or pull impact, if you will. The oil and gas index and the metals index are about 2.5% higher. The IT index, meanwhile, is 5% lower. Not too much damage done on the advanced decline ratio right now. Flat on the indices, but a relatively mixed day of results, which we'll analyze over the next few minutes. A blowout set of numbers for Axis Bank, and Europe's open on a reasonably good footing. So all in all, day one of a brand new week with all the kind of baggage that we had has not shaped up too bad, at least with 1 hour of trade left to go. Good afternoon, Mini.
Good afternoon, Rahul. Europe is doing well, but UK is not doing too well, largely on the back of some inflation numbers that came in over there. But really, it is a mixed bag as far as stock markets are concerned, and a lot of pockets looking extremely weak. One wonders whether they're justified the kind of beating down, for instance, the IT pack is receiving right now, but Infosys down about 105 rupees. That apart, we are seeing a lot of interest in some of the heavyweights like Reliance, etc. So that is a pocket of the markets that is doing fairly well. SBI is doing well as well, up about 42 odd rupees. But really, results are pouring in, and it's welcome to result season because you've got a slew of companies out with numbers. You have to slice and dice through those numbers. A lot of those stocks buzzing as well. There you have the Nifty, the Sensex down about 0.19%. The mid-cap index completely flat, and the small cap index also largely flat. It's really some of the heavyweights as far as the Nifty is concerned that is showing some bit of a perk up. On the upside, we are seeing buying coming into the metals side. SAIL, Sterlite, all these stocks are up and about. They have been seeing buying for the last couple of trading sessions. ONGC has been very strong in terms of supporting the index, and even the auto pack, which actually didn't see too much of a fall on Friday. Those stocks are up and about. It's difficult to call these markets. Going into trade today, there was very little to cheer, Rahul. But the only thing that could be resulting in this bounce is perhaps a technical bounce, considering the kind of pain that we saw on Friday.
Could be, Mini, and I think a lot, at least on the IT sector, has to do with the results factor. I think if you look at CMC's results and Tanla's results, both of them have shown a 100 basis point contraction in margin. In fact, Tanla has grown at just about 16% top line and 12% bottom line, and margins have contracted by 1%. CMC has actually shown a profit degrowth of 1% on a top line growth of just 7%, and margins have contracted by 1%. And Everon Systems as well, where you've seen the sales come off by 26% and profits come up by 55% on a quarter-on-quarter basis. And they're talking about incremental new projects coming in at orders that are 300 basis points lower on margin front. So the first signs of evidence that we're getting from mid-cap technology are not too good, I think, going on the back of what Infosys said. But I think if you look at some of those numbers like Axis Bank, with a kind of increased provisioning of 200%, despite that the management has come out and delivered at 80% top and bottom line growth. But it gives you an indication of market sentiment. But to be fair, Mini, I think the stock reacted very sharply when those numbers came in. I don't think anyone was expecting such strong numbers. And in fact, on a pre-provisioning basis, if you look at Axis Bank's numbers, the profits would have been up about 120%. So I think it set the tone for the banking sector. I think there are some concerns starting to emanate on the IT front, because Infosys did not revise its dollar guidance for the year end, and now mid-cap IT, the smaller ones, are starting to show signs of cracking.
But having said that, I think the other thing that stands out in IT, Rahul, is that you can't paint them all with the same brush. Each of those companies has a different dynamics, and to be fair, the beating down is also because these stocks were not that badly beaten out, and as the rupee depreciated, we actually saw a perk up in these stocks all of May. So some bit of catching up with the rest of the market, but Axis Bank net interest margins up a whopping 80+%. Don't know whether that's going to be the norm in the banking sector, but that's definitely something to watch out for. Let's get to our first market voice in, our Balakrishnan from Centrum joining us over here. Bala, good afternoon. Good to have you. This is, of course, the midst of earnings season. Very choppy markets. In fact, right now the markets are totally flat. We started the show just minutes back and the markets were up about 3/4%. What do you make of the corporate numbers? Let's start off with the Infosys numbers and the entire IT valuation space right now.
Well, I think IT in January, if you go back to January, that time it looked like a very tempting trading buy. I think the large companies, the business models are good. Yes, we knew that there is going to be a margin contraction. So it is not that what results we are seeing today are surprising or anything like that. I think the markets have been reacting more to general events. I think valuations are different. I think Infosys may be valued 18, 19 times. I think the growth is still visible. So at every level, I think there is value. The only thing is, I think the time horizon and the future becoming cloudy across sectors is what is probably holding back money.
But does this kind of battering on Infosys get justified? Yes, expectations were a little high considering the rest of the sectors were expected to go through pain, but we lost about 7.5% on Infosys on Friday. Today it's down another 6.5%. Would you say it's a compelling buy at these levels?
Well, I wouldn't go into the stock per se, but I think anything you buy today, I think your perspective has to be a minimum of 2 years, I would say, because going forward, I think things are not looking very good on the macro front, which will actually, see, if you look at it in perspective, if you take the oil bill itself on a full year, it is about 6 to 6.5% of your GDP. Now, if it gets passed through to the retail, then the macro is not impacted. Now, if it is passed through, then again it's going to eat into demand for something else at some stage. So that is one worry. Inflation, I think I have maintained that I think the government numbers are just catching up with what's happening on the ground. But every time that number comes up, it's one more nail in the bare arsenal or armory. So you use that to do that. And third is, I think most important, I think the long-term interest rates don't seem to be cooling off. Now when you have an interest rate of 9% plus for 10 years, I think the stock market P definitely gets derated downwards. So in that context, whether it is technology, whether it's any other sector, I think the markets will start to look expensive. So in that context, either whether it's an Infosys or an Axis Bank, I think people are worried. I think confidence is not coming into buy. So if there are 2, 3, and these are over-owned stocks, let's take it. I wouldn't say over-owned, widely owned. So when there are 2, 3 people coming in to sell, if you don't have incremental buying, the price fall would be steep. And I think some of them are reacting also to the ADR prices which closed very steep on Friday. I think that's something happening there also.
Actually, Mini, if I can take that question, if you look at Infosys' numbers that came out, if you look at the low of today, it's a 1565. So on an EPS guidance of about 101 for the entire year, you're talking about a stock going at 15 times 1 year forward. When its peers, the other Nifty representations are going between 11 to 13 times. What are you paying 15.5 times for is what you have to ask yourself the question. Is it because of rupee depreciation? Because the dollar guidance for the year has not been revised and 65% of Infosys' revenues come from the US. So if the call is that the US macro environment is going to improve, then you ask yourself the reverse question. Why was the dollar guidance not up at this point of time and the rupee guidance was up by about 10 rupees? So I think you have to, the first fundamental question you want to ask yourself is Infosys still priced expensively versus its peers? On empirical evidence, it is, because if what the managements have given in terms of the guidance. So I think that's one aspect. The other aspect is, you mentioned, you cannot paint all the IT companies with the same brush. Fair enough. But I think, it's increasingly, like we were discussing last week as well, Mini, it's becoming a sell on any sort of small negative news rally. Absolutely. And a sell of, basically people have ridden about 7-8 days of good amount of money. And I think any bad news in the system as is being reflected today, even a semblance of it is pretty much being sold into. Would you largely concur with that?
I think that's what I think that's a typical what's happening in the marketplace. But I think when you look at these big stocks, I don't think you should look at them as a pure trading calls, I would say. Of course, traders do make up a large part of the market. But I think for investors, I don't think they keep worrying about 100 to 100 rupee movement here and there, because I think so long as the company story is fundamentally sound over the longer term, I don't think there is a cause for concern as far, I wouldn't really worry about it.
Right.